Hey, good morning, everybody. This is Patrick Zielbauer. It's about 8:50 on the 20th, and I just wanted to throw a quick video together that might demonstrate how you might be able to use these MPD sort of analysis in real time. And here's what we're looking at. So I've got the four indexes up here, the Dow, the Russell, the NASDAQ, the S&Ps in the background. All the markets started breaking just a little bit a few minutes ago. There wasn't really any reaction to the Fed speak earlier this morning. That actually still might be going on. I just know it started around, I think, 7:15. And so what I did was I was looking at the Russell future. Let me bring that dome up here. Here it is. And I just put one on at 65.90. Now this is a simulated environment, just so you're not, or you make sure you're clear on that. But you can see that the market came down. It punched through that lower MPD area. And with the Russell's a smaller contract than the other indexes. So if you think the micros are too small, but the S&P, NASDAQ, and Dow are too scary, you may want to look at the Russell futures because they have about half of the cash value of the regular indexes, the other indexes. And what that basically means is you can generally use a wider stop and not risk more money. All right, there's going to be days where the Russell is the outlier. It's a small cap index. All the indexes are affected differently by tariffs and news and geopolitics and such. As an example, when the tariffs were first announced, the Dow got hurt the hardest because of the exposure to China. Then we had the tech wreck with the Nasdaq, where it was always the loss leader. The Russell, sometimes that happens as well. So if you can generally accept the idea that the instrument you're trading is sometimes going to be the weird one, then you can proceed, obviously with caution, but you can just accept that that's going to be a reality from time to time. Right now, the indexes are all kind of moving in the same direction. They're all up about 0.2%, give or take. Nothing's really the outlier. But the Russell came down a little bit. And so, if I were someone who is more risk averse, I might say, this is a no trade because we didn't get it really close to that lower MPD line down here. But because it's the Russell and you can afford usually a wider stop in the Russell, this is something that you might be willing to take if you are willing to trade a regular E-mini as opposed to the micro. So that's a long trade that's on right now. You can see it. If we were to manage this, I would say don't panic out of it. You may even be comfortable adding one more if you have the tolerance for that below the lower MPD. This is not a trade that has to be over in the next 5 minutes. All right, the whole goal of using the MPD lines is to slow down the frequency of the trading and make the trading decisions based on the levels which we already know in advance. We see them here. Now they're going to move because they're all based on the VWAP, but they don't move that much, unless there's a dramatic move and a huge amount of volume. So, you're making your decisions based on these pre-planned sort of levels. You're looking at the activity. You're looking at the relationship between one market and the next. Do you want to buy a market where all four of the indexes are making a massive new low all at the same time? No, that's a stupid counter trend trade to take. But if there's not a lot of cohesion between the markets, if there's no news, there's nobody tweeting, you may find that those sort of choppy environments could actually work in your favor. Okay, I sort of harp on that in some of the other videos. So this is an example of something like that. In terms of how one might manage this position, I would say maybe you look to cut this trade loose near this other upper VWAP here, or not VWAP rather, but the half MPD line. That's the blue line, and the reason I suggest that is that you may start to see some selling pressure there unless the market is about to go make a new high, in which case if you really want to sit tight on it, one other management strategy that could be really smart here is if that upper area, if we start to get a little closer to that upper area, throw a stop in at your break even and walk away and come back in 3 hours. I mean, you may give back some open trade equity, but you may come back in 3 hours and this thing is 10 points higher. How are you ever going to catch a runner if you're sitting there trailing a stop or watching it like a hawk every 10 seconds? You never will do it. And it's my opinion that you need to be able to catch one of those from time to time in order to make this work, to keep yourself sane, to pay for all the scratch trades and the losses and such. Every now and then you got to catch one that runs the whole day. It's going to be really hard to do it if you're sitting there, staring at it or running a 3-tick trailing stop. It's just not going to happen. So let's see how that plays out. I'm going to probably wait a couple more minutes and see if we get a little closer to 69. And if we do, maybe I'll throw a stop in and leave it. Maybe we'll take it off and call it a win. But the objective here is to not micromanage it too hard. All right, I'll keep you posted. Thanks. Hey everybody, welcome back. So let's resume the video and we'll show you where things are at right now. So we're looking at the Russell here again, and what you may notice is that the Russell has now reached that sort of mid-level MPD, the half MPD there. It's breached through it. It's also starting to lead the way percentage-wise. It's up about 0.4% compared to the other indexes are at 0.2, 0.27, and 0.29. So a little strength there. So what I decided to do was just throw a stop in at a $100 gain. So if this gets hit, less commissions, it's still a plus $100 trade idea. We're long from 65.90, 67.90 is 2 full points, $50 a point. It's only one contract. If I had had maybe two, maybe you'd take one off and leave the stop down here at break even and see if you really have a chance to catch something that runs, for a couple of hours. But in this case, I'm going to be pretty satisfied if this gets hit. That would put us right around the VWAP right here where it currently is, the white line at 1567.5. So, kind of in this area. If that gets hit, it gets hit. No big deal. But I'm going to call this one a winner. And if it really runs, then we'll come back and revisit that later in the day. But as of now, this to me is a pretty good use of the MPD lines. There's only one trade that has occurred in this with this method so far this morning that I have seen. Since I started looking at the market, there may have been a couple other opportunities earlier in the morning, as you can see down in this area and maybe up here as well, but I wasn't paying attention at that time. So again, not too many trades. Small amounts of activity, a lot of pre-planned stuff, looking at the levels in advance. No need to be in and out of the market 1,000 times in the first 30 minutes of the day. Let's see where it goes. So thanks again for watching. I hope you found it useful. If I come back in another portion of the video, it's because this thing really took off. All right, talk to you soon. Thanks.